Exchange facilities. There are various reasons for wanting exchange facilities. You might be buying an international mortgage, in which case you might want to send a chunk of money into a different currency so you can actually buy the property, or you might be making international investments, or you might be sending money overseas to friends, relatives, or whatever. And four of the most commonly seen exchange facilities are as follows. I've only listed three of them, but the fourth one is currency options. So let's listing them in turn. Spot exchange. This is the simplest exchange, in which the exchange rate is set immediately on the spot, and the payment settled usually within 2 days. In other words, if you want to change £50,000 into dollars, then you're given a rate of exchange on the spot, and you have to cough up the money within 2 days. A forward exchange contract. This allows you to fix an exchange rate ahead of the trade, and tends to be used for larger sums of money. So if you want to change money in 3 months' time, then you might want to use a forward exchange contract. Option dated forward exchange contract. And different banks might have slightly different titles for these. One of the banks uses exactly these titles, and others will use variations of these titles. So option dated forward exchange contract. This is similar to a forward exchange contract, but it gives you the chance of executing the deal slightly earlier if the exchange rate suits you better. Now, as the flexibility increases for you, guess what? The fees increase as well. So the more flexibility you want, then expect to pay more in fees to the bank, and expect the exchange rates to not necessarily be the most competitive. Currency options, these tend to be used as a hedge. In other words, they're used to protect a deal or a business against adverse currency movements. So if you have £100,000 in income coming in from a business overseas, then you might want to in advance hedge that. So you want to ensure it in a way that it's going to be protected. If you need to find out more about it, then there are ways of doing that, but I suspect most people watching this video won't need to know too much about that. So I'll not go into any more detail because it gets quite confusing. Fees. When deciding which international bank account to choose, don't place too much emphasis on the fees that they charge. They won't be free, they won't be entirely cheap, certainly not as cheap as other retail ordinary bank accounts, but bear in mind other factors such as such as the currencies in which you can trade, the online banking facilities, the branch locations, the mortgage availability, and other factors that the service must provide you for it to be of value to you. So, for example, if one bank offers the essential facilities that you require, such as branches in the right location, mortgage currencies that you need, but charges more than the other banks that don't offer those services, then the more expensive banking service could well be the one for you. Another factor to consider is the hidden fees. For example, one bank might have lower fees that are called fees and charges, but they might offer a worse rate of exchange. And that is what I personally would consider to be a hidden fee. So for an international bank, the rate of exchange is pretty crucial. Bank accounts, sorry. So make sure that you know what you are comparing. Savings, moving on to savings, they all want your savings and investment money, so you'll generally find that most international bank accounts will fall over themselves to get you to give them that money. What this means in practical terms is that they tend to offer a pretty good selection of terms, i.e. the length of time in which the deposit needs to remain untouched. They'll offer a big variation from 30 days to several years. Accessibility to your funds. Some savings accounts will give immediate access without penalty but offer lower rates of return. Others will say leave your money with us for a long time and you'll get a much higher rate of return. Currencies, generally speaking, they'll offer a good range of currencies, well, actually some more than others, in which you can save, and offshore placement of opportunities and other bits and bobs.